Hi. Let's learn about capital projects and how they work. A capital project is a long-term, capital-intensive investment to build upon, add to, or improve a capital asset. These projects are characterized by their large scale and high cost compared to other investments. Regular capital investments, such as new facilities, structures, or systems, are necessary to accelerate growth within a company. Management of risk is a key driver of successful project development and delivery of a capital project. Common examples of capital projects include infrastructure projects such as railways, roads, and dams. Corporations also allocate large resources to build or maintain capital assets, such as equipment or new manufacturing projects. Capital projects often require equity or debt financing to make them happen. Additional funding sources may include bonds, grants, bank loans, existing cash reserves, company operation budgets, and private funding. Government capital projects are large-scale, costly projects to maintain or improve public assets, such as parks, roads, and schools. Non-capital projects are those that fall below the jurisdiction's thresholds for capital projects in terms of building space or total project cost. These projects may instead be called non-capital projects. Careful planning and realistic estimates, affordable funding, good cost management, and the project's chance of becoming profitable are all essential for the success of a capital project. Here are two key takeaways. 1. A capital project is a long-term, capital-intensive investment to build upon, add to, or improve a capital asset. 2. Capital projects require significant planning and resources, and refer to infrastructure, manufacturing projects, and more. Hope this would help. Thanks for watching.